and welcome to today's Market Matters show. Thank you for taking time out to be here with us today. We'll be running the live Q&A at the end, and so we've enabled the question feature. It's on the right side of your screen in the GoToWebinar panel, so if you have any questions for me or for Adrian, just type them in there and we'll get to them. Also, if you miss anything during this show, don't worry, we are recording the entire webinar. We will post it to the North Metro SBDC YouTube channel at the end, and we'll email you a link when that's available. My name is John Hovey. I'm the Special Projects Consultant here at North Metro, and I have with me today in the COVID studios, Adrian Hovey, some relation, who's also a lead consultant with the North Metro SBDC. He's a financial advisor with Edward Jones as well. He's an expert in small business development and personal finance. He's got an Ivy League MBA, and he is continually mistaken for an economist. I am thrilled to be here today to help educate you entrepreneurs out there about finance and how the markets affect your business goals. And I know Adrian is too. I want to make sure that you stick around to the end of the presentation. It's going to be about 20 minutes. And at the end today, we'll be revealing Adrian's new guide that I've actually put together this week, called the Fast Track to Penny Stock Millions. It's a new strategy that you're not going to want to miss. It's really hot. So I'm going to turn it over to Adrian here. And as always, we'll be looking at the following. Number one, what has been happening in the markets recently? Number two, what does it mean to you, the entrepreneur, small business owner? And third, last but not least, the fast track to penny stock millions. I cannot wait for that money. All right, Adrian, what have you got for us this week?
Yeah, thanks, John. Good morning, everybody. Very pumped up to be here this week. So much interesting stuff has happened. Lots to talk about. I really love bringing it back to, those business fundamentals too for everybody. Hope that's a good service for the community. Appreciate all the feedback we've been getting about the show. Everybody who writes in and gives us a little bit of a tip here or there makes for a better show. So keep that up. So we'll jump right into it. As always, I can't talk about specific situations for confidentiality purposes. So if you have questions about something that's specific to you, just hit me up offline and we can cover those things separately. So I'm going to go ahead and bring up some slides for you guys this week. I want to show you a few things that are pretty interesting. So we know maybe last week wasn't the greatest week, right? It was the single worst week since the original COVID situation happened in March. Obviously, some of the states that had maybe opened up a little bit saw a few more infections and hospitalizations of COVID than they were expecting. So that kind of put the brakes on some of this recovery a little bit. There was some concern about that, concern about the speed of the rebound. But now this week, we're starting to see that retail sales are up. So I think, we believe it's going to be volatile. There's really not much, anybody can do about that. But the economic recovery as a whole really is starting to take shape. So I wanted to show you guys this graph. It's kind of important. It's a good reminder for some of the things that are, themes about the COVID, right? So what you're looking at here is what would happen if you had invested $10,000 in the S&P 500 since 1985. And if you just bought and held, that's the yellow bar at the top, you would have far outperformed if you missed the 10 best days, missed the 20 best days, and et cetera down the line. So why would you have missed those best days? The reason is because the best days in the market often occur right after the worst days. So when you sell out, buy back, I know that you're maybe trying to time the market and you think that you can, but the reality is most of the time it's more advantageous to you to buy and hold. Why does this matter to the business? A couple of reasons. We've talked a lot about focusing on what you can control, right? You can control your attitude, you can control your actions. You can't really control the volatility, and you can't predict when things are going to happen. So this just helps reinforce, stay focused on the things you can control, right? Your reaction to volatility is one of those. Strongly encourage you to think about your own personal strategy with your business and with your investment strategy, that it's going to go up and down, right? Sales might be good one week, they might be bad the next week, but what you're looking at is how is it performing on the whole and what's my long-term strategy. So I think it's just a good reminder for everybody to keep focused on those things you can control. So the next sort of fun graph here, hey, stumbles don't spell disaster, right? It's not the end of the world. So what you're looking at here is the daily confirmed coronavirus cases. So you can
Oh
see
boy.
there's, oh, what was that, John?
I'm just seeing that's a lot of cases.
That's a lot of cases, and you can obviously see where they started to ramp up there at the end of March, but they are beginning to show a very obvious, declining trend with certain days up, certain days down. I think there's so much wrapped into this that you've all been reading in the news about vaccines, about testing and all that stuff. I think what's mainly important is that we think that the economy the recovery is going to be durable, right? There are going to be stumbles, including bumps when the cases go up. That might cause the markets to fumble a little bit. But, pre-coronavirus, returning to pre-coronavirus levels will be sort of a gradual thing, right? I think the vaccine is going to be important. Once the vaccine pathway is very clear and has been lined out, that's going to be a very solid, boost to the economy. But the idea is that just as the confirmed cases are going to fluctuate, I think the recovery is going to fluctuate. So we don't predict it, but it's okay. And the fast start that we've had is a good sign. So this graph, not too much to read into it, but it's basically the U.S. quarterly GDP growth, and that big downward spike in the middle was back in 2008, the housing crisis. And you can see that after the crisis, a couple quarters later, you see a really strong bull market recovery. So I think that's important to look at. So the fast start that we've had is a good sign for a durable, stable recovery. And I think, we can all hopefully look forward to that. Again, understanding that volatility is not something any of us can predict, but keep in mind that long-term strategy, focusing on the things you can control. So talked a little bit about this week. I just want to reinforce the importance of it. Preparing for the unexpected. This is an unexpected time. We'll have good weeks, we'll have bad weeks, but I think we've all learned an important lesson about preparing for the unexpected. So make sure that you're having those conversations with yourself, with your business partners, and with your employees about, how do I protect the business? How do I protect income for myself, for my family, and my employees? All of those things, and what are the tools that I need to do to protect myself, right? Whether that's investing in marketing if you're a small business to grow your business, whether that's insurance products to protect income or your family, whatever those might be, now is the time to be having those conversations.
And rest assured, salons and barbershops will be open soon.
Make sure that you are prepared for whatever might come down the pipe. So that's kind of it for today. Not a whole lot more to talk about, so I'll kill the slides here, and I'm sure, John, we've got some other questions from the audience and things of that nature.
Oh, yes, we do. And, before we go to the audience questions, thank you for those slides. They're very, very informative. I wanted to share something that I read with you, Adrian, in the financial headlines this week. It's again, one of these things that sounded important to me, but I was just baffled. And I read it twice, and it was almost like it was written in another language. It's all Greek to me.
All right,
could I just read you some lines from this article and tell me about this? So the headline says, Dow closes 150 points higher as Fed announcement sparks big comeback from massive losses. And some highlights from the article: stocks jumped on Monday, recovering from earlier losses as the Federal Reserve announced further measures to support the market amid the coronavirus pandemic. The Fed said they would buy individual corporate bonds, blah, blah, blah. And it says that, this marks the latest announcement that the Fed is going to continue to support the credit markets during the coronavirus. So, I'm just confused because we were saying that last week was bad, but now it's saying we're closing 150 points higher. What's going on?
I think you and that headline are illustrating exactly the point of unpredictability, right? The point of volatility. You're going to have a good day, you're going to have a bad day. And that's exactly what we're talking about earlier, a few slides back, where you can see the impact of staying, buying and holding over the long term. I think this is sort of true of investing as it is with your business. I mean, there's a lot wrapped up in that headline. That's a big swing. the motions of the Fed we talked about last week, they're very important. They instill confidence in the markets. But honestly, does it really mean anything directly to the small business? Is that an action item for you? No, that's not an action item for you. Your action item is staying focused on what you do, running your business, what matters to your business, and what your long-term strategy is, right? You're not going to be able to predict these things. We love it when the Fed is active and taking steps to protect the economy. That's wonderful, right? We love to see upward swings in the Dow. That's also wonderful. It's an indicator that the markets are recovering, that the economy as a whole is recovering. But those items are less actionable and more sort of like, how do you feel about things, right? And feelings are a big part of it. Don't want to discount your feelings, because when you feel confident that things are getting better, sometimes that means you'll be more active and you'll be more excited and energized about your business. So I don't want to take that away from it, but honestly, I think what this illustrates, the most important point is that from week to week, even day to day right now, we're not going to see predictability, and that's not something that I would recommend even worrying about. I would stay focused on, how do I run my business? What things do I need to do? Honestly.
That's great. And this is what we tell the entrepreneurs too. They're going to have ups and downs in other areas, whether that's confidence or sales or other things. And yep, that long-term vision, that's super important. Yeah. Well, thank you for distilling that headline for me, bringing me back down to earth. It's a good service of a consultant. All right.
Yeah.
Before we wrap up this edition of Market Matters, we do have a few more things to go. And yes, we have a question in our panel here. This one comes from Richard. Are you ready for a question, Adrian?
Okay, what you got?
All right, Richard asks, Dear Adrian, that's quaint. I have a business idea, but I am reluctant to go into debt to fund my idea. Should I take on a business startup loan, or should I just save up to start my business? This is kind of a two-part question. He goes on, I need $15,000 to start my business. So what kind of product is best if I want to save that money as fast as possible?
Got it. Okay, so there's a lot going on there, Richard, but I'll try to address it as kind of concisely as possible. So basically, you're asking, should I save up or leverage, right? Should I take out a loan, and if not, what's the best investment to help get you to your goal? So in this case, sounds to me like you always have choice, and some people feel good about debt, some people don't. You'll have to make that's an internal choice that you'll have to make. I think both pathways are good. I think that if you're choosing to start your business, really what matters to you is what's your level of risk, right? What's your risk tolerance, and what's the time horizon for this particular piece of money? You want to start this business by the end of the year, then you need to dictate, in your savings plan, I will set aside exactly the amount of money every month to get to the 15,000 I need to start the business, and that money should really be protected, right? It should be something simple. A savings account's a great vehicle for something like that, because it's not going to experience the fluctuations in the markets, and you're going to need that money at a certain time, so you want that money to be there. So in a nutshell, I'd say good savings habits are very important, especially when you're thinking about, hey, I want to start a business in 1 or 2 years. That's not necessarily an appropriate way investing in the market or a vehicle is not necessarily an appropriate way to treat that as a strategy. So I would say part of a bigger discussion, it's verging a little bit on that confidentiality issue we said, but honestly, when we talk about short-term goals in general, understanding that money needs to be there when you want it to be there, that dictates kind of a simple cash saving strategy. I hope that answers your question.
Great, that's wonderful. And to piggyback on that answer, Adrian, I would say, Richard, if you haven't already reached out to either North Metro SBDC or whatever SBDC is closer to you, then that'd be a good thing to do as well, because it's not just about that $15,000 launch money. There's a lot that goes into starting a new business, and the sooner you could establish a relationship with a business consultant, the better. We have resources to help you in all sorts of areas. And that is great.
That's a good point, John. I'm going to just build on that really quick, which is, over at the SBDC, we get these questions a lot. And everybody's, laser focused on the funding for the business because that's obviously a very daunting and difficult part of it. But alongside that effort, as daunting and as oftentimes as difficult, but just as important is the business plan. So when John says engage with the consultant there, that is something that we can all help with and is absolutely crucial, because the best, the best savings strategy in the world doesn't really matter if you don't have a good plan. So definitely want to reinforce that having a business plan and understanding where that money will be used and how it will be deployed, super critical.
Fantastic. All right. Well, that's the only question that I'm seeing in our panel. And so I think you know what time it is. All right. Adrian.
Time for me to go.
Track to penny stock millions. I got my pennies and I want my millions. I know you do too, folks. So get ready. I wonder where I will put all this gold. So I designed this program for you, Adrian. I got to get this thing moving. And this actually came from the inspiration from a New York Times story that I read this week called Trading Sports Books for Brokerages. Board bettors wager on stocks. And if it's in the New York Times, then, what more reputable source could I go to? Let me just read you a little bit about how I got this idea, and then you can lay out the plan for me. When the coronavirus pandemic hit, all sports betting sputtered to a stop. Imagine, that industry was crushed. And so it says, the bettors turned to one of the last places in town for reliable action, the stock market. Some Wall Street analysts see people who are used to betting on sports as playing a big role in the market's recent surge, which has largely erased its losses for the year. So, the writing is on the wall. I figure if it works for them, it will work for me. It will work for my entrepreneur friends. How do we make that money? How do we get into the penny stocks game? Give us the fast track to millions.
Oh, man. Well, of course, I feel like you tee me up for this every time. There's no fast track to millions. This is not a thing that exists. For gamblers, go gamble if you like to gamble. That's a thing you can do. There's casinos. I just I guess I don't recommend gambling on things you don't know very much about. Maybe that's the way to look at this. So there's no fast track to millions. Let's just put the brakes on that. Penny stocks. Let's just put those aside and think about how you would. Take this back to a business owner, right? What would you do if you were a farmer who spent 20 years in his field growing vegetables? Are you likely to go out and start a heavy equipment manufacturing business? I don't know. Maybe if it was your hobby, you knew a lot about it, that would be something you could do. But it has to do with your knowledge, your experience, and what you feel comfortable with. So in the world of investing, there's ways to lose, ways to win, good strategies, bad. Nobody can predict the markets. Nobody can guarantee you that an investment will perform, but there are definitely ways to improve your chances, as it were. And I think if you stay focused with your business personally on high quality, long-term, solid planning, the same could be said for looking at companies. If you want to invest in companies that have stable, long-term businesses, good track records, have the potential for growth, things like that. And when you start winnowing down all the possible investments, you get to some that are, that fall into that high quality category. And the same might be true for your business, right? Like you want to set yourself up for success. So, do activities that you know well, maybe, or stay focused on industries that you know well, or things that you know well, ideas that have the potential for growth, really solving deeply customer problems, right? When you understand what's a pain point for a customer, what's a difficulty that maybe you can do, that you can solve, or a process you can do better than somebody else. Those are things that add value, and those are tangible things that good companies have, and you'll see that both in the markets and both in your own personal business. So no fast track to millions. Stay focused on high quality, long-term potential, honestly. I think that won't steer you wrong.
All right. Once again, apologies to our audience. I will get you those millions. But thank you again, Adrian, for showing us the wisdom of a consultant, keeping my wings level, as it were. I think that's where you really shine, and where the SBDC can really offer some value to folks as well. So thank you for that.
You're welcome.
Folks, to the audience here, remember northmetrosbdc.com. That is where we offer free consulting and no cost and low cost training for entrepreneurs and existing businesses. You can visit us anytime online, book a consulting appointment with Adrian or any of our other experts. We have consultants in the fields of legal, accounting, small manufacturing, on and on. It's an amazing resource, North Metro SBDC. And do look for that email from us that will have the video link to this program. And we'll see you next week on Market Matters. Thanks a lot, folks.
All right. Have a great day, guys.